India's stock market is on fire. The benchmark indices, Nifty 50 and Sensex, are scaling new heights. Both indices have crossed historic milestones, reflecting immense investor confidence in the Indian economy. The Nifty 50, representing the top 50 companies, surged past the 20,000 mark for the first time ever. Meanwhile, the Sensex, comprising 30 blue-chip companies, reached the 70,000 level. These record-breaking numbers are not just statistics. They symbolize India's growing economic might on the global stage. This surge is fueled by a potent combination of domestic and international factors. Domestically, the recent election results have instilled a new wave of optimism. The return of a stable government with a strong mandate is expected to accelerate economic reforms and boost investor sentiment. This positive sentiment is further bolstered by encouraging GDP data indicating robust economic growth. India's economy is now projected to grow in the current fiscal year. Adding to this momentum is the positive wave in global economic cues. Despite ongoing uncertainties in some parts of the world, India's economic resilience stands out. The country's strong macroeconomic fundamentals, coupled with a stable political environment, make it an attractive destination for foreign investments. This influx of foreign capital is playing a key role in propelling the market to new highs. As we delve deeper into the factors driving this remarkable rally, it's essential to analyze the specific triggers across different sectors. Understanding these sector-specific trends will provide a more comprehensive picture of the forces shaping India's economic landscape. From infrastructure to technology, various sectors are witnessing a surge in investor interest, contributing to the overall market exuberance. The recent election results have acted as a shot in the arm for the Indian stock market. The decisive mandate secured by the incumbent government has instilled confidence among investors, both domestic and foreign. This political stability translates into policy continuity, which is crucial for long-term economic planning and investment decisions. Businesses now have greater certainty, encouraging them to expand their operations and invest in new projects. This renewed optimism is reflected in the performance of various sectors, particularly those sensitive to government policies. Infrastructure, for instance, is witnessing a significant uptick, driven by expectations of increased government spending on roads, railways, and other critical infrastructure projects. Similarly, the banking sector is also gaining traction, fueled by hopes of faster economic growth and increased credit demand. The combination of political stability and economic reforms is creating a fertile ground for businesses to thrive. Coupled with the positive election outcome, India's impressive GDP growth figures have further fueled the market rally. The latest data reveals that India is among the fastest growing major economies globally, surpassing even the expectations of many analysts. This robust economic performance is a testament to the government's reform measures and the resilience of the Indian economy. Investors are taking note of this positive economic momentum, further boosting their confidence in the Indian market. However, it's crucial to acknowledge that economic growth is not solely driven by government policies. Several other factors, such as private consumption, investment, and global trade dynamics, also play a significant role. Understanding these interconnected factors is essential to gauge the sustainability of India's economic growth and its impact on the stock market in the long run. While the current trajectory is undoubtedly positive, maintaining this momentum will require continued efforts to address structural challenges and foster a conducive environment for businesses to flourish. While domestic factors are undoubtedly driving the Indian stock market's upward trajectory, global economic cues are playing a crucial supporting role. Despite some global uncertainties, India's economic stability stands out, attracting foreign investors seeking lucrative opportunities. This influx of foreign capital is a significant factor propelling the market to new heights. Several global trends are working in India's favor. The ongoing trade tensions between major economies have prompted investors to diversify their portfolios and seek alternative investment destinations. India, with its stable political environment, strong economic fundamentals, and a vast consumer market, emerges as a natural choice for these investors. This shift in global capital flows is providing a significant boost to the Indian stock market, particularly in sectors like technology and manufacturing. Furthermore, Specific sectors within the Indian economy are experiencing a surge in investor interest, contributing to the overall market exuberance. The technology sector in particular is attracting significant attention from both domestic and international investors. Driven by a thriving startup ecosystem, a large pool of skilled talent, and increasing digital adoption, India's technology sector is poised for exponential growth. This positive outlook is reflected in the performance of technology stocks, which have been among the top performers in the recent market rally. In addition to technology, other sectors like pharmaceuticals, renewable energy, and consumer goods are also witnessing significant investor interest. The pharmaceutical sector, known for its cost-effectiveness and quality, is benefiting from increasing global demand for affordable healthcare solutions. Similarly, India's ambitious renewable energy targets are attracting investments in solar and wind power projects, positioning the country as a leader in the global transition towards clean energy. These sector-specific trends highlight the diverse range of opportunities available in the Indian market, attracting investors with varying risk appetites and investment horizons. As the Indian stock market continues its record-breaking spree, market analysts and economists are closely observing the trends and making predictions about the future. While there's a consensus that the current momentum is likely to continue in the short to medium term, opinions differ on the long-term outlook. Some experts believe that the market is entering a period of sustained growth driven by strong economic fundamentals and favorable demographics, while others caution against excessive optimism, citing potential risks such as global economic slowdowns or domestic policy uncertainties. Most experts agree that India's long-term economic prospects remain bright, fueled by a young and growing workforce, increasing urbanization, and a burgeoning middle class with rising disposable incomes. These factors are expected to drive consumption and investment, creating a virtuous cycle of economic growth. However, realizing this potential requires addressing structural challenges, such as improving infrastructure, enhancing ease of doing business, and fostering innovation. Despite the positive outlook, some experts advise caution, pointing to potential headwinds that could impact market sentiment. Global economic uncertainties such as rising inflation, geopolitical tensions, and potential recessions in major economies could have spillover effects on the Indian market. Domestically, factors like fiscal deficit, inflationary pressures, and the pace of economic reforms could also influence investor sentiment. Navigating these uncertainties requires a careful assessment of both risks and opportunities. Investors are advised to adopt a balanced approach, focusing on long-term investment goals rather than short-term market fluctuations. Diversifying investments across different asset classes and sectors is crucial to mitigate risks and maximize returns. Staying informed about economic indicators, government policies, and global market trends is essential for making informed investment decisions in this dynamic landscape. The soaring Indian stock market has significant implications for both investors and the broader economy. For investors, especially those who have been invested for the long term, the current bull run translates into substantial wealth creation. The rising tide is lifting many portfolios, generating impressive returns and exceeding expectations. However, it's essential to remember that stock markets are inherently cyclical, and periods of high growth are often followed by corrections or consolidations. While the current rally presents an opportunity for significant gains, it also underscores the importance of disciplined investing. Investors should avoid getting caught up in the euphoria and making impulsive decisions. Instead, they should focus on their investment goals, risk tolerance, and diversify their portfolios to mitigate potential losses. Seeking advice from financial advisors can provide valuable insights and help navigate the complexities of the market. Beyond individual investors, the booming stock market also has a profound impact on the broader Indian economy. The surge in market capitalization reflects growing investor confidence in India's growth story. This positive sentiment can create a virtuous cycle, attracting more investments, boosting economic activity, and creating employment opportunities. A thriving stock market can also facilitate the government's efforts to raise capital, for infrastructure development and other social sector programs. However, it's crucial to ensure that the benefits of this economic growth are distributed equitably across all sections of society. While the stock market rally is a positive indicator, it's essential to address the concerns of those who are yet to fully participate in or benefit from this growth story. Bridging the gap between the stock market's performance and the economic realities of a large section of the population is crucial for achieving inclusive and sustainable growth.